Hello guys, welcome back to ESENtaxa. Andrea Vito here, and in this video we are going to talk about Malta, the new jurisdiction that we are going to introduce in this channel. If you're new in this channel, indeed, ESENtaxa talks about how to optimize your taxes in a specific country. So if you're planning to move to a specific country in Europe, we help you to understand if that country tax-wise makes sense or not for you, based on your specific structure, based on your specific company structure, type of incomes, worldwide type of incomes, assets abroad, and financial assets abroad. So based on your general situations and also based on your family situations. And we understand along with you if you can benefit from certain specific tax regimes specific for that destination. Maybe you're not aware of, and then you could have spared a lot of taxes. So stay tuned on ESENtaxa, like button, notification bell, and subscribe to the channel if you like this kind of content, because we're going to release for free this kind of information that you might find extremely useful. In today's video, instead, we are going to talk about Malta. So, first of all, as we do when we introduce a new jurisdiction, we always start to talk about the income tax rate for individuals. This is the basics, so we have to start from that, because at the end of the day, what I want to know, how much taxes I pay as an individual when I receive income in my own pocket. So how it works in Malta, we know, and it's very well known that this country is sort of tax haven for certain situations, for certain scenarios, is true, and we're going to understand when this is true and when it's not really true. Okay? So first, let's start from the basics. Income tax rate for individuals. If you are moving to Malta and if you become tax resident in Malta, you are subject to the worldwide income. And on general cases, general type of incomes, employee income, self-employed income, professional incomes, are subject to the ordinary tax bracket rate system, which is in common with a lot of European countries. So how it works? Very easy. The first bracket, it's basically 0% taxes up to 12,000 euro per year, which means that if you earn up to 12,000 euro in Malta, you don't pay any taxes. Okay? Then from 12,000 up to 16,000 euro, you pay 15% taxes. Okay? And the third tax bracket is that from 16,000 up to 60,000, you pay 25% taxes. Okay? And above 60,000 euro per year as income, you pay 35% taxes. And 35% taxes is the maximum tax rates that you can have in this island, okay? So as you can see here, it's lower than ordinary tax bracket rates in comparison with high tax country in Europe, but it's still, you have tax to pay in Malta as well, okay? Now, if you're single, okay, a single person moving to Malta, if you are basically married, the tax bracket rate at 0%, it's from 0 up to 15,000 instead of 12,000. And if you are a parent, so if you have a child with you, this tax bracket rates is up to 13,000. So basically, the tax bracket rates in Malta, they change slightly based on your status, if you are married or if you are a parent. Okay? So there is not only one table, as we have seen here, but also in the middle tax bracket rates, they change slightly based on your personal situation, family situations, okay? Of course, the tax bracket rates works in this way. If you're earning, for example, 60,000 euro, it doesn't mean that you pay 25% in all of your income, but you're going to pay an average between 0, 15, and 25. Be careful about this point. You don't pay entirely 25. So if you reach the higher tax bracket, it means that only from that point onwards, from that point of your income onwards, you're going to pay 25%. Okay? And the previous part of the income, you will be still subject to the lower tax bracket rates. It means that always the first 12,000 euro per year you don't pay any taxes. And keep in mind that this is just the first side, how it works generally speaking, but behind this table we have in Malta several ways to reduce taxes, optimize taxes at personal level with small allowances here and there, some deductions for housing, etc., etc. So this is something that we can check in the consultancy with us, and in the description below the video you will have our consultancy link, Calendly, to book a consultation with us, and we can talk about if this country makes sense for you or not. Now, let's move forward. Very interesting is the real estate market in Malta. Now, how it works, the taxation in Malta. Let's talk about not taxes when you purchase your home, which are still low, by the way, but the taxes when you put your home under rent in Malta. So imagine you purchase a property in Malta, classical example, you want to put it under rent, and you want to see how much taxes you pay on this property in Malta. First, good news, Malta doesn't have any annual property tax. So the annual property tax is zero. First big advantage. The second advantage is that you can opt between being, as a tax resident in Malta, you can opt between apply the tax bracket rates or apply a flat tax of 15%, okay? You have these options. Either apply 15%, but this is a flat taxation that is applicable on your gross income, so you don't have any deduction expenses allowed. Most likely it resembles mostly the same flat tax in Italy. And, or you can opt for these tax bracket rates in which you can deduct your strictly related expenses to your home that you have put under rent, okay? So you can have the option to choose between those two systems. But if you are non-tax resident in Malta, which is a very common situation, for example, you're living in another country in Europe and you want to invest in a property in Malta, you want to put it under rent, either Airbnb or ordinary renting. How much is the taxation? You can still opt for 15% tax flat if you wish, but then you might tell me, well, if I have only one property under rent in Malta, I can apply the tax bracket rates because it's zero here for the first 12,000 euro. So 1,000 per month as a rent, for example, would be tax-free. Unfortunately, this is not possible for non-resident because the non-resident, they don't have the same tax bracket system, but they have another one, which is very less favorable. Imagine that only from 0 to 700 euro per year you paid zero. And then from 700 up to 3,700, you start paying already 20%. So, and then etc., etc. So it goes more higher, straight to 35. So you have a different tax bracket rates for non-resident. That's the reason why normally tax residents opt to apply the 15% flat tax. Okay? Maybe this was not very common to know this kind of information. So here in ESENtaxa we go very in details with these small details because the devil is in the details. Okay? Then, what is instead very nice for Malta? For Malta, actually, we have also a tax regime, which is the non-dom tax regime. This is a very important one. It's a very famous one. Non-domiciled in Malta means that you don't have fundamental connection to this country. You move to this country, probably you have a different passport, you're not Maltese, and you're not intend to stay in Malta forever. So those are the classical general elements to be eligible as a non-dom resident in Malta. It's a classical thing that you will find also in UK. Probably UK now is getting rid of it anyway, but you will find it still in Ireland and in Cyprus. So non-dom regime works that your foreign income, it's not taxed if you don't remit this income into the Maltese territory. What doesn't mean I'm not remitting my foreign income, it means that I'm not spending the money that I've earned abroad inside the territorial Maltese territory. It means also that if you make a bank transfer from your foreign bank account, which is in another jurisdiction, into a Maltese bank account, you are remitting the money, and then you will pay taxes only on the remitted amount of money into the Maltese bank account. Same as if you go to any ATM from the street of Malta, you are withdrawing cash. Also, the amount of cash must be taxed as remitted basis taxation. It's subject to remitted basis taxation. So every time you earn something abroad and you put it inside Malta, you have to tax this amount of money with these ordinary tax bracket rates. While if you keep your money earned abroad, in a foreign bank account or in whatever other platform, foreign platform, you are not subject to the ordinary Maltese taxation. But to apply for not-dom, along with the first requirement of being not domiciled, as we have explained before, you also have to earn at least 35,000 euro as foreign income. Okay, these are boundaries that in recent times Malta put in place, and you have to anyway pay a minimum fee every year of 5,000 euro. So at least you pay 5,000 euro in taxes, minimum, and you have to at least have 35,000 euro as income. Then you can also make million, you always pay 5,000, okay? This is how it works, the not-dom in Malta. So it could be extremely interesting, this regime, when you're not really, for example, you're living in Malta, but you're moving quite often abroad, and all the money that you're earning abroad, because probably you have a company abroad, you spending this money abroad, because for traveling, for working reasons, etc., etc. So also this scenario must be extremely well evaluated in the consultancy with us. In the description below the video, you have indeed our calendar link for a consultation to check if this non-dom regime makes sense for you or not. And we can also help you with our academy, course academy, ESENtaxa Academy, which is a new product that we are launching in this time. It means that we are teaching you all information about international tax system, tax planning, special tax regime in different jurisdictions in Europe. So you might find interesting this academy if you want to be a little bit more aware about how the system works, generally speaking, worldwide speaking, okay? Okay, and now cherry on top, the classical and most nice thing of Malta, which a lot of people are already aware of, it's quite famous, I would say, is the famous mechanism to allow you to pay only 5% taxes on your company, on your corporate tax level. That makes Malta very attractive. So how this system works, for real, let me explain you a little bit in details how it works. You have to make a discrimination. Either you are a tax resident in Malta or you are non-tax resident in Malta. So it's the same thing. So if you are tax resident in Malta and you want to establish a Maltese company in the island, because you're working from the island, your company, your Maltese company, it's subject to a 35% corporate tax rates, okay? Then what happened? And when you make your profit and you're going to distribute your dividends to yourself, probably you are the only owner of the company, you're going to be taxed also on your dividend level with your Maltese tax bracket rates. But right before to get taxed with the Maltese tax bracket rates, Malta gives you back this 35%. It's like a tax credit, because the principle is that you are subject first on the profit level, then Malta gives you back this profit, okay, and then basically you are only taxed on the dividend level. So basically the Maltese structure works as you are a pass-through company, like it was an LLC at the end of this tax refund system. So basically you are, for example, if your tax pressure in Malta, based on your tax bracket rates that we have seen before, it's around 20%, Malta gives you back the remaining 15%, okay? Because you have to basically reach 35. So you cannot be taxed more than 35. So if your tax bracket rates was 0, Malta gives you 35. If your tax rated rates was 20%, Malta gives you the 15%. Okay, so basically they refund you back all the taxes that you have already paid at profit level up to your tax rates that you're supposed to be taxed, okay? So, and then you get taxed only on dividends, because basically you got the reimbursement on your profit level. This is if you are tax resident in Malta. Let's talk about the case when you're non-tax resident in Malta. Then you are still subject to this refund on dividends. There are also refunds on interest and royalties with different percentage. Now in this video, for the sake of this video, that's why this video is going to be too long, I'm just focused on dividends. The dividends works that if you're non-resident, so you're a person non-resident in Malta, you can receive back 30% of your 35% profit tax, corporate tax, okay? And that's the reason why you get taxed at the end only 5%. So this is how it works. If you're non-resident, you own a company in Malta, or you are multiple shareholders, non-resident in Malta, all of you wants to own a company in Malta, all of you must be non-resident, this is a very important point, and you can get back this 30% out of 35. And that's the reason why, effectively, your corporate tax, it's actually 5% after the reimbursement, because you have to ask the reimbursement back. And then the dividend tax, who pays the dividend tax? Well, in your country where you're tax resident. So, if you're living in a country that taxes on your territorial basis, because this is a foreign company for your country of origin, for example, you're coming from Panama, and or Gibraltar, which is still in Europe but has a territorial basic tax system, you don't pay any dividend tax, and then you pay only 5% on corporate tax, you see? So based on your tax residence country, for example, if you're living in Italy, you pay 26%. at the top of these 5 because you are subject on dividend level in a country where you're tax resident because you're non-tax resident in Malta. Okay? And finally, you can also opt to improve your tax strategy for a 2-tier level structure, which is an operative company in Malta, which is received the 35% reimbursement strategy, then here pay only 5%, and then your holding company, which basically you can receive the dividend from the operative Maltese company to the Maltese holding company, you receive the dividend at 0%, okay? And then you can hold this company either as an individual, living abroad, or with another company which is in another jurisdiction, okay? And here this jurisdiction, if it's in Europe, you can still benefit from the tax regime and still be at 0% here, or if you're holding Maltese in another jurisdiction which has a convention to avoid the double taxation with Malta, which is quite favorable, then you can also be tax-free. And then at the end of the day, it's true that you have a multi-layer structure, but you pay only 5% an operative company in Malta, and you pay nothing on your holdings. Okay? Now, in this video, I have to be very, very general because these are only the hints of the opportunities that you can find in this island, which are very interesting, but a case-to-case analysis must be done in our consultancy call, okay? Video call. So as you can see, Malta gives a lot of opportunities. Some details are hidden in the law, also has to be checked. And for certain kind of business, this structure might be extremely interesting because basically you don't pay any taxes through all your holdings under certain conditions, of course, of a tax condition, for example, if you're talking about European holdings, but you pay only 5% on corporate level. And you're running your business in the heart of Europe, basically in a full European jurisdiction. And that's it for today. I think I put so many information about Malta, and if you want to know more about the jurisdiction, let me know in the comment. If you want to know more details, we can also release more and more video. See you to the next content. Bye.